Today I'm going to give you my top 10 tips for beginning traders and investors. Hi everybody, I'm Sami Abusaad. I'm a professional trader and director of education at T3 Life. I'm going to share with you the top 10 things I wish somebody told me when I was a new trader. Okay, here we go. Number 1, don't wing it. Do it right or not at all. If you think about it, trading is the only business in the world where the rank amateur has a 50-50 chance of making it. You can't just wing it and be a doctor, a lawyer, a plumber, or anything else. What are the chances that having never played an instrument like the piano, that you could get on stage and perform well? Zero. Zero chance of that happening. Same in every other profession, except in trading, because there are only two things you can do. You can buy or sell, go long or short, and in the beginning, you can just buy or short something and get lucky. Without a methodology that has an edge, do you really expect to take money away from the professionals who've been doing it all their lives, have virtually unlimited resources, incredibly sophisticated technologies, algos, HFTs, who live, breathe, and eat trading, and you expect to go in there and take money away from them just like that, and then be able to do it on a consistent basis? Really? Not gonna happen, unfortunately. Zero chance of that happening. So again, the lesson here is you can't have a shoot from the hip approach and expect to win in the long run. You have to trade a methodology that has an edge and be able to do it on a consistent basis. Okay, we're gonna move on to number 2. Study your own psychology. Understand how your brain is not naturally built for trading. We're actually biologically wired to lose. In Reminiscences of a Stock Operator, Jesse Livermore says that most traders lose money because they take small profits when they are right and big losses when they are wrong. On page 114, I sometimes think that speculation must be an unnatural sort of business. This book. Because I find that the average speculator has arrayed against him his own nature. The weaknesses that all men are prone to are fatal to success in speculation. The speculator's chief enemies are always boring from within. It is inseparable from human nature to hope and to fear. In speculation, when the market goes against you, you hope that every day will be the last day, and you lose more than you should had you not listened to hope. The same ally that is so potent is success bringer to empire builders and pioneers, big and little. And when the market goes your way, you become fearful that the next day will take away your profit and you get out too soon. Fear keeps you from making as much money as you ought to. See, I know it by heart. The successful trader has to fight these two deep-seated instincts. He has to reverse what you might call his natural impulses. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear that his loss may develop into a much bigger loss and hope that his profit may become a big profit. It is absolutely wrong to gamble in stocks the way the average man does. I know it exactly by heart. So what is he really talking about here? He's saying when the market goes our way, we usually become fearful that we might give back our profit and we get out too soon. And the opposite happens when the stock goes against us. Hopium kicks in and keeps us in losing trades longer than we should had we not listened to hope. So the takeaway is pay attention to how hope and fear influence your decisions. Don't let fear of giving back profits get you out of winning trades too soon, and similarly, don't let hope keep you in losing trades for too long. Okay? That's the takeaway. There's a saying that sums it up quite nicely. And the saying goes, traders eat like birds and crap like elephants. Pardon my French. Eat like birds, crap like elephants. They make small money when they are right and lose big money when they are wrong. So you don't want to do that, okay? Moving on. Number 3. Your attachment to money is the main cause of your failure. Here's a quote for you. When an archer shoots for nothing, he has all his skill. If he shoots for a brass buckle, he is already nervous. If he shoots for a prize of gold, he goes blind. He's out of his mind. He sees two targets. His skill has not changed, but the prize divides him. He cares. He thinks more of winning than of shooting, and the need to win drains him of power. Isn't that beautiful? Written some 2,500 years ago by a Chinese sage named Chuang Tzu. When I read it, I was blown away because it totally applies to trading. You see, the paradox is that traders do all the wrong things to be successful. By focusing on the money, we lose. By wanting or needing to win so bad, we lose sight of what trading is all about. And it's not about the immediate result. Trading is not a sprint, it's a marathon. You can't think short term. What matters is the end. It's a business. Do you know of any business that tries to make all its money in just 1 or 2 weeks? I don't. And the ones that operate like that are rip-offs and scams. They make a quick buck and leave town. So again, don't focus on the money. Don't be attached to the immediate results. If you do, unfortunately, you are almost guaranteed to lose. Okay? By the way, if you are getting value out of this video so far, please hit the like button and check out the links in the description below. Moving on to number 4. Focus on the process, not the outcome. This is very, very similar to the last point. But in here, instead of telling you what not to do, what not to focus on, which is the money, I want to tell you what you should focus on, which is the process. Again, the paradox is, while ultimately money is what we're all after, by focusing on the money, we lose. We get blindsided by it, so to speak. We start taking shortcuts, doing things we wouldn't otherwise if we weren't focused on the money. And instead, and this is what this point is about, we need to focus on the process, on executing our plan consistently. The money will come as a byproduct. But if you focus on the money, that's like putting the cart before the horse. You will not be able to have the discipline to wait for the right trades. It will just mess you up psychologically. On the other hand, when you focus on consistency rather than the money, you basically do the same exact things day in and day out. You take exactly the same setups. You enter the same way. You manage the same way. You don't deviate from your plan at all. And it's your consistent actions that lead to consistent results. But if your actions from day to day are random, how do you expect to get consistent results? You see what I mean, everybody? Remember, random actions equal random results. All right, number 5. This is very, very simple and takes almost no time at all to implement. Here it is. You don't have to figure it all out before you can become successful. I mean, you don't need to know everything to become a successful trader. All you have to do, if you've been trading for a while, is to stop doing what you know does not work based on your experience. Stop doing what you know does not work based on your experience. As the saying goes, I do not know the key to success, but the key to failure is fill in the blank and work on eliminating it. When you eliminate the bad, what are you going to end up with? You're going to end up with all the good. That's what you're going to end up with. Have you ever heard the saying, becoming a great trader is a process of subtraction rather than addition? It's 100% true. If you've been trading for a while, trading becomes more about eliminating the bad stuff, the bad habits, the self-limiting beliefs, than it is about acquiring new information. Okay? Elimination rather than acquiring new information. Don't worry about what the successful traders are all doing. You'll get there. Just work on eliminating what you know does not work from your experience. Okay? Number 6. Learn to trade earnings. Learn to trade earnings. Learn how the stock market works and why prices move the way they do. Simply put, stock prices follow earnings. And that's why Apple, as of the date of this video, is the most valuable company in the country. They make twice as much as the second most valuable company on the list. But to even put it more accurately, stock prices follow earnings growth, which is why Amazon is the fourth largest company by market cap, even though they don't make a fraction of what Apple makes. Apple sometimes makes more profit in one quarter than Amazon has ever made since inception. Okay? It's also why Tesla, your favorite stock, which loses money every year, is worth as much as Ford and GM combined, both of which are profitable companies. So if you want to understand stock prices and why stocks move the way they do, you've got to know how to trade earnings and take advantage of earnings plays. I know you've probably been told not to hold stocks through earnings, but that's because people don't really know how to trade earnings. I make a living trading earnings. That's where the oil is. And as they say, go where the oil is. Okay? Earnings is where the oil is. That's where you get the big moves. Number 7, trade in batches and follow the PEAR strategy, the PAIR strategy. People ask me all the time, what would you do differently if you had your first 6 months back? The absolute first thing I would do is follow the PAIR strategy, which is an acronym that stands for Plan, Execute, Analyze, and Refine. Again, plan, execute, analyze, and refine. First, I recommend trading in batches, say 20, 30, or 40 trades at a time. The more active you are as a trader, the larger the sample size has to be. The P part is plan. So you have to document in your plan in detail the pattern or strategy that you want to trade. And that's, again, the P in PAIR. Number 2, execute your plan. And that's the E in PAIR. Once you've completed the batch, once you've executed your plan, completed the batch, analyze the results, leave no stones unturned, figure out what's working and do more of it, figure out what's not working and eliminate it, then make changes to your plan based on your results. And that's the R, the refined part of the PAIR. Then put on another set of trades and repeat the process. Okay? Now, tell me this. How can you not improve and become a better trader over time? It is impossible not to get better over time if you do this. Literally impossible. So again, trade in batches and then follow the PAIR strategy. All right? Number 8. This is an easy one. Trade in a group setting, not by yourself. If you're a beginning trader, you don't yet have the tools or the know-how to find the best ideas on a daily basis. Being in a trading room with lots of eyes on the charts means more ideas being tossed around, which means more opportunities, some of which are probably a whole lot better than what you can find on your own. So that's why I think it's really important to trade in a group setting, not by yourself, but you have to find the right group setting. You have to find the right trading room or chat room. All right? Number 9, don't paper trade for too long. Definitely not more than a few weeks in the beginning. There are so many good reasons to paper trade, such as not risking anything while you're trading in the beginning, getting comfortable with your platform. All of these make sense, and that's why I do think you should consider paper trading in the beginning. But paper trading is unrealistic. You don't experience real market conditions, such as slippage or how orders get filled. Most importantly, you don't experience the emotional reality of real trading. We don't respond the same way to profits and losses if we're on a simulator, which is often why students don't learn anything or learn very, very little while paper trading. You know, in this environment of zero commissions, I recommend trading very small size rather than paper trading. You'd get a lot better feel for trading, and how your emotions operate, what makes you tick as a trader, none of which you would experience while paper trading, okay? And last but not least, number 10, trade in line with your own natural personality. Jack Schwager, author of Market Wizards, was a struggling trader. He earnestly set out to interview the world's best traders to find out what they all did that made them successful. He actually thought that they all traded alike, like the same strategies. Much to his surprise, he found out that they all traded differently, but they had one thing in common, and that was that they all traded in a way that suited their own natural personality. Now, I left this till the end because it usually takes time to figure out what exactly suits you as a trader, but it's extremely important that you figure it out and not settle until you've figured it out. Is it day trading? Is it swing trading? Is it trading earnings, gaps, reversals, breakouts, pullbacks? You simply have to figure it out and focus most of your time around it. All right? Well. I'd like to close by sharing with you a favorite story of mine about the lion who thought he was a sheep. It's kind of a famous story about a jungle lion who one day came upon a flock of sheep, and to his amazement, he found a lion among the sheep. It was a lion that had been brought up by the sheep, and so he had no awareness that he was a lion. He would bleat like a sheep, eat grass like a sheep, move around, run around like sheep. Now, imagine the surprise of the jungle lion when he saw this other lion among the sheep. Well, he went straight for him. He got a hold of him and said, "What are you doing here?" And the sheep lion trembled in every limb. The sheep lion said, "Have mercy on me. Don't eat me." But the king of the jungle dragged him with him and said, "You're coming with me." And he took the sheep lion to a pond and said, "Look." And the sheep lion looked and saw his reflection in the water for the first time. Then he looked at the jungle lion and looked back in the water, and he let out a mighty roar. He was never a sheep again. In that moment, he was transformed. He was never the same again. Well, my friends, thank you for watching this video. My hope is that it encourages you to really think about everything that we discussed today and get an inkling of what it takes to be a successful trader. Then this video would have been worthwhile. I certainly thank you for taking the time to be here with me, and please, if you found it helpful, hit the like button and leave a comment. Maybe let me know what your favorite tip was. And if you want to know more about my services, check out the links in the description below, or feel free to just Google my name. I'm Sami Abusaad, Director of Education at T3 Live. Best of luck, everybody. Take care.